All right, when markets crash, money doesn't disappear, it moves, right? It moves from people who panic to people who are prepared, like me. In this video, I want to make sure you're on the right side of that transfer, that you are prepared for this. Now, let's talk about a couple of different things, and especially like market crashes, because market crashes are how long-term wealth is actually built if you know what to do, and that's what we're talking about. Thinking about markets dropping fast, right? Like we've seen this happen. We've seen the S&P fall double digits in just a couple of days, and headlines are screaming like recession, tariffs, inflation, uncertainty, sell everything, the whole world is ending, yada, 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 yada. We've all seen it. The combination scares people, and when people are scared, they make very poor financial decisions. And it's a common thing, honestly. But here's the truth. This situation feels unique, but it's actually very normal in market history, and it's actually something that a lot of us look for. There's 3 types of market drops, and understanding this alone removes a lot of the fear. First, we'll talk about corrections. That's going to be like 10% down. This happens almost every year. You usually recover in a few months. Like this is nothing new to us, you know. Bear markets, 20% or more down. This happens usually every 3 or 4 years, can last around like 9 months on average. And then you can have obviously like a major crash. We're talking like 30% plus. It's rare, but every 8 to 13 years, historically, something of this magnitude happens. And if it gets even worse than that, it is what it is. Like anything can happen, but markets have always recovered and they've always reached new time highs. Here's what not to do, and this is very important. Let me be extremely clear on this. Panic selling is the fastest way to permanently lose money, and a lot of people panic sell. A loss isn't real until you lock it in. Just because it shows red and it shows maybe you lost $5,000, it's still not real unless you lock it in and sell it. It can always just go back up. I've personally watched like my portfolio swing thousands of dollars during crashes, up, down, and that would have only mattered if I sold, but I didn't. Selling only makes sense if you need cash in the next like 1 to 3 years. You're intentionally rebalancing. It's like if you're trying to stay in it long-term and profit, you need to hang on to everything. Selling because you're scared is not a strategy, and it's the quickest way for you to like actually lose money. The biggest mistake people make, here's what almost everyone gets wrong, and we'll go ahead and talk about this. They sell when the prices are down, and then they wait for certainty to buy back in. I don't know why people do that, but they do. But certainty only comes after prices recover. So like, why would you skip out buying at a discount and buy when it's high again? Like, that doesn't even make sense to me, but it does to a lot of people for whatever reason. Think about like March 2020, markets dropped nearly 10% one day and then jumped almost 10% the very next day. Miss a few of those days and your long-term returns get absolutely destroyed. Most of the best market days happen right after the worst ones. You just have to sit and wait them out and let your money do what it's going to do in the market. What smart money does during crashes, and here's what prepared investors do differently. Here's specifically what I do. They see crashes as discounts. You're going to get quality assets at a discounted price. Now, we'll put it into like an analogy. When something you already want goes on sale, you don't panic. You buy more, right? That's typically how it goes. Stocks are the only thing people run away from when they're cheaper, and I don't know why they do it, but that's just how it is, and it blows my mind. Now, let's talk about a simple like crash game plan, something that's actionable, right? Like you don't need perfect timing, you just need a clear set of rules. Now, keep cash ready before crashes, obviously, because you want capital to be able to buy those cheaper assets, and you want to be able to deploy it in stages. Personally, I don't guess bottoms. I will buy in layers. So like if the market drops around 20%, I'll deploy part of my cash that I have sitting in like my money market fund. If it drops closer to 30%, I'll deploy more. And so I always keep like a ready reserve in my money market fund that's still getting 4% returns, but it's ready to go if I need. Now it's not perfect, but reasonable beats perfect, right? Consistency always beats emotion. Let's talk about an emergency fund, non-negotiable, right? Like everybody's got to have an emergency fund. One thing matters more than buying stocks right now, like cash, right? You need cash on hand. You need an emergency fund. You should never just like get rid of your emergency fund to go buy stocks in a crash or anything. You need at least like 3 to 6 months of like bare minimum expenses, right? Keep it in a high yield savings account. It protects you from like forced selling, things like that. Like let's talk about like the worst case scenario isn't market volatility. It's having to sell investments because you lost income, right? Now, a big picture reframe of all of this. Every generation thinks their crisis is the one that's going to like break the system, right? If you're older like me, you've lived through a couple of them, but history says otherwise. You're going to see a couple of them in your lifetime. Think about like pandemics, wars, inflation, financial crisis, like the list goes on, right? Markets adapt, innovation continues, wealth compounds. It's the same cycle, just a little different every time, but history repeats itself for the most part. If you're feeling nervous right now, that's normal. If you're nervous during downturns, that's normal, but nervous people don't win. Prepared people win, right? So if you stay calm, follow the rules, you play the game long term, this won't be the worst thing that happened to you financially. It could actually turn out to be one of the best things that happens to you financially. Market downturns and crashes can be very powerful to you if you are calm and you have cash ready to deploy and you are in it for the long game of it. That's the market crashes will build more millionaires than anything, and a lot of people just don't see it that way because they're nervous and they get scared.